Hello again, Michael. How are you doing today?
Good morning. I'm doing awesome, Martin. How are you doing?
Doing good. Still a bit sick, so please excuse my sick voice again. But I hope to get better soon.
I am sure you'll be super better soon.
I hope.
Let's welcome everybody to the show, Martin. No shenaniganery today at the beginning. Hello, everybody. Welcome back to AGTP Daily. We go live it's good to get back in the cadence, isn't it, Martin? We go live every weekday at 11 a.m. Eastern time to discuss the most important topics and stories in tech in the United States. Oh, I'm trying so hard, Martin. Today's Wednesday, the 17th of June, not February. I did February last night. Nobody's really sure why.
You really struggled with the dates for some reason.
Don't understand what's going on.
What, there's too many days, Michael? What's the problem?
I don't know. Anyway, let's get right to it. I think that the big news today is the big news.
Yeah.
And I think everybody knows what we're going to talk about. We're going to talk about how SpaceXAI or SpaceX buys Cursor for $60 billion. I think actually this is more interesting than people actually believe. And I think there's a lot to talk about here. And then later in the show, we'll be joined by Satyen, Sangani, a CEO at Alation, who's doing some interesting stuff to explore how agentic data intelligence is going to help enterprises turn governed, trusted data into usable AI and better business decisions. And then finally, Ronaldo, CPTO, the Chief Product and Technology Officer at Birdie AI, is going to join us. He's going to talk about how AI-powered customer intelligence helps companies turn customer feedback, any kind of customer interaction, service interactions, into better retention, stronger products, and more responsive businesses. I actually think that that's a super interesting topic to cover as well.
Our two guests today is going to be super interesting. Very excited for that. Very excited.
Yeah, very, 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 very exciting as well. Okay, so do you remember when we talked about SpaceX
options
investing $10 billion, buying an option into and do you remember that? Do you remember the day we did? It's a rhetorical question because I already looked it up.
A month ago?
On I almost said February again, on May 22nd.
Okay, close enough.
Yeah, so close enough to a month ago. We did an entire segment on this.
Yeah.
And I think, part of the interesting thing is we talked about the annual revenue and blah, blah, blah. And we kind of said that there was a reason that they wanted to buy this. So at the end of the day, SpaceX is buying a company called AnySphere.
Yes.
Which is the company that owns Cursor, right? Yes. Or that basically made Cursor. Yeah. And
when you speak to people at Cursor, I mean, when I email people at Cursor, their domain that they use in their email address is at anysphere.com.
Oh, yeah, makes sense, right?
So that was the first hint that I had.
And again, just details, the transaction is expected to close in Q3.
Okay.
So what is that? July, August, September? Sometime 2026. And here's another interesting thing. It's all stock.
Yes, I think that's interesting, actually. That's one of the interesting part of this deal.
Yeah, so no cash is changing hands. None of the money that they raised in this IPO, which was only $75 billion. So what are they going to do? Take all of it or part of it or a bit of it? No, they're just going to give them stock, which is fine. And also, it depends if they're issuing new stock, which is not clear to me. If they are, it's dilutive, which is kind of neat. And let me do what we do every day.
Check SpaceX price.
Since last Friday. Check the SpaceX stock price. Down 5% today.
Okay.
So down $10 and down 5% today.
Okay.
Which makes sense to me. And again, if you look at I just want to take a look at this 5-day chart. Yeah, because I think it does matter. Very interesting. But I think, Martin, remember, just don't forget the conversation that we had on day one. On Friday, or it may have been Thursday. No, this was Friday, because we did a long, detailed conversation about what happens to these kind of sort of very high and prominent IPO stocks.
Yeah. Yes.
Anyway.
Also, what's interesting to me on the price in the full stock deal is that I think they say that they will. So they buy at 60 billion, okay? And for the number of stock that they give to the Cursor team, basically, they said we are going to take the average of the 7-day price of SpaceX, basically.
When though? Before the 7-day price?
So from the IPO plus 7 days. And then they take the average, and that gives the price of the stock, and then they give the amount of stock to actually get to 60 billion. So when I read that for the first time, I was like, actually, they buy it for free.
Say again?
Actually, they buy it for free. Because if you go from $135 per share right, of SpaceX on the IPO, and which valued the company at $1.7 trillion, right? It's like approximately. And then your 7-day average, right, gets you up to 2 trillion or 2 point something trillion, which is
Call it two, whatever.
let's say 2, which means basically you made 200 billion during this period.
Mhm.
So which means the 60 billion were free money that they didn't have a week ago, right?
Okay. How many people you think actually that are paying attention actually understood that from the beginning? Just to be clear.
I have no idea, but that struck
I'm
me when I
gonna
was
say closer to zero than it is to like any other number.
when I saw that. I was like, so actually they buy it for free, right? Like,
So
so
that's why whenever you do one of these all stock
yeah,
transactions, but think
yeah.
think even more, Martin,
Tell me,
about
tell me.
what the implications are, what we think is going to happen to the stock over time, and then
Exactly.
think about the implications of what that means for was it free, and also think about the benefit to the guys and gals at Cursor that actually own stock in Cursor and then have that stock swapped out into stock at SpaceX.
So I think here what happened is that they basically said, let's pay that, they say, okay, we buy you for 10 billion cash or 60 all stock. That's why the number is so big. Like basically the number makes no sense because there is
No.
no rationale
Uh,
behind that because
well,
it's
well,
free money.
well, let's be clear because I looked at
Okay.
this as well
Okay.
today.
Okay.
when when Cursor was annualizing $1 billion a year in revenue, when they were annualizing, sorry, $1 billion of revenue, they did a Series D or what, I can't remember. It doesn't even matter.
Okay.
That valued the company at $29.3 billion.
Oh, okay. Okay.
So that's the market saying, here's your revenue number, here's your multiple on top of that revenue number. And if it's $1 billion of revenue and it's $29 billion, it's like a 29 times revenues.
Yeah. Okay. So there was
It's not insane.
so they were a benchmark. Like they were a benchmark at
But
29 billion.
but here's what's even more interesting, Martin.
Mhm.
By the time this thing came out,
Mhm.
they were annualizing 2.6 to $3 billion of revenue, so 3 times more.
Mm.
But 2.6, let's just use 2.6 because that's the number. I think the $3 billion was a rounded number. 2.6 times 29 is approximately $76 billion.
Mhm.
Approximately. I'm just
Yep.
doing some math in my head. You can do it if you want on a calculator. But it's around 76 billion bucks.
Yeah.
So they're paying $60 billion in stock for it.
Yeah, in stock. And I don't know if I want SpaceX share
But
at
wait a
the
second, though.
average after
It's more,
IPO.
right? Yes, it's more important than that, right?
Yeah.
As you're saying, it's
Yeah.
not that they're getting allocated those shares at $135.
No.
They're getting it allocated at least at 135 plus 190 plus 200, depending what it's probably the closing price on the 7 days right afterwards.
Yes. So let's say they did it at 190. Okay, let's say 190. So
Yeah, 190.
they already paid a huge premium on SpaceX price, right? Because it was 135. So if they got the stock before the IPO, it was 135. Now they buy the stock at 190. It's a
Yeah.
weird deal. It's a weird deal. And then, as you just said, like they triple their revenue, that didn't triple their valuation, and they also get the SpaceX share at a premium. I don't know. Weird to me. It's weird.
Right.
How yeah.
And my presumption is
Yeah.
there's a lock-in,
Okay. Which means
which means they can't sell their stock right away.
yeah, I mean that makes sense. And plus maybe it's also like a multi-year thing, right? Like you get I don't
So
know.
there's probably a cliff, and then they
Yeah.
can sell some stock in year 1, year 2, and year 3.
Yeah, something like
I'm
that. Okay.
presuming that, yeah, because that would be normal. In other words, if you started a company, like if you and I are founders of a company, which we are, and we wanted to bring somebody on and give them founding shares, well, we've been at this for a while, so there's no way we're just going to give them shares. They're going to have to earn into them,
Yes.
and then there's going to be a cliff as well when they get them, and then when they can sell them.
Yeah. We should try to find cursor investors who were impacted by this deal, and maybe the one that got into the $30 billion round, right? To just ask them like, what do you think about it? I'm really curious. Are they happy? Just they double their money on paper, right? But now with the cliff plus the plus the lock-in, how does that look like actually for them who entered that $29 billion valuation?
Mm.
It's like, I mean, there's no guarantee that SpaceX, like, I mean, if they get the share at let's say 190 and a $2 trillion valuation for SpaceX, there's no guarantee that in 6 months or in 1 year, SpaceX valuation is not 1 trillion. it could be divided by two, right? Like, I mean, they have
Yeah,
almost
yeah.
no revenue,
So again, for
right?
SpaceX, this is an incredibly great, but there's more here
Interesting for
actually,
him. Yep.
right? So let's just back up for a second,
Yeah.
because I think there's more going on here. First of all, why would SpaceX want to buy Cursor, and why would Cursor want to be bought? Because they don't have it's a private company.
Yes.
Like somebody could actually bid $25 gazillion for them, and they could just say, "Yeah, thank you, but no, thank you. We're just going to go home." Like they don't have to accept this bid.
Yep.
But they said yes, and my presumption is, Martin, when they did the initial $10 billion investment, when we talked about it back in May, that there was a little bit of a wink and a backroom handshake that's going like, look, once we do the IPO, this is what we're going to do. Like, I don't think this was shocking to anybody inside of Cursor. Well, to the senior management at Cursor. And again, maybe they have more information than we do, but they're making a long-term bet, or at least a medium-term bet on SpaceX as well.
Which means they think that this company is going to be worth more, like much more, because they accept a full stock deal, right? So
yeah.
So they really believe SpaceX is going to grow, and they are doing a good deal at getting the stock at a 7-day average price after IPO. They believe that's a good deal.
Right. So the guess on the SpaceX side is that the price is going to be higher, at least than the IPO price on average.
Yeah.
Right. Because then the money is not just free money, it's free money. Do you know what I mean? It's super free money.
Exactly. It's like free. Like they didn't have 60 billion a week ago, now they do have it, and they don't really have it. But this entire IPO, Michael, like when you told me that they were putting like only 4% of the company on the stock market, like is it normal? Like, is it something that
No, it's not normal.
It's not normal.
No,
So
it's not normal.
Like first of all, let's start there.
Normally like a penny stock or some, can I swear a little bit? A shitty company would do that.
Okay.
Because there's no way that they could issue all of their stock because there's not enough demand for it. So what they tried to do is they tried to manufacture demand. They're like, because 96% of the stock is not available. Only whatever it was, 4% or 5% that they issued is available. It's going to go into the index, so it creates natural demand for it, but unnatural demand in a way, because it's like if they'd issued all of the stock,
it would be much lower.
Well, yeah, I mean, does anybody understand supply and demand dynamics? It's stock's not trading at 187.63, down 7% today.
Yeah, and this is because, like, let's take the total trading volume, right? Like, what is it? Is it like a couple 100 billion, 400, 500 billion, something like that? Less than that, no?
I don't know.
But it's
in the chart that I'm looking at, I don't see volume.
But it's no more than 500 billion. Like it must be pretty low, because there's only 4% of the company on the stock market, where Apple has 99%. So it's like huge gap. Do you have a range, like in the IPO that you participate in, Michael? Do you have a range of a normal, typical IPO? Like if tomorrow,
I think it's more like Apple. I think it's more in the 90s than anything else.
Okay.
Because sometimes what they do is they leave a little bit of stock left over.
Yeah.
But it's called I think it's called a green shoe, if I remember correctly.
Okay.
And that green shoe is left over just in case there's excess demand.
Okay.
Right, because the one thing that the guys that syndicate this, they kind of want a little bit of a pop on day one.
Okay, of course, yeah. Makes sense.
But they don't want a massive pop.
Okay.
Why not? The reason why is because they don't have to deal with everybody going, well, you price this thing, you priced the IPO at 135, but the first trade was like 190. Why didn't you just price this at like 175?
Yeah.
Because you didn't raise enough money for this company. But then the flip side is the syndicate runners will tell you, yeah, but we also created demand and a conversation around the stock too. And since the insiders own a bunch of the stock, they're happy. Right? Because they raised whatever amount of money that they wanted to raise. They created excess demand for the stock. And they also, if they had the right to sell some of the stock post-IPO, they sold at a better price.
Yeah.
So there are tons of reasons why they do this. There's a balance, right, between like what you want that price to be and where you actually issue it. Remember, you do a roadshow where you go out and ask people on the roadshow, like, what would you pay for this? They're always going to lowball you.
Yeah, for sure.
Because they want to pay as little as possible in the IPO. Anyway.
Yeah, no, this dynamic is super interesting. Like, especially if normally a company that IPO put 90% plus of their share on the stock market, and here they put only 4.
Let's call it 5, but yeah.
it's insane. Like the difference is crazy. Like, first of all, like how can we all agree that a company is worth $2 trillion where there is only 4% of the company that is tradable, right? Like I mean, plus it's the first in the AI space, right? So and as you say, like the retail investors, I mean the first of all the roadshow and all the share sale was oversubscribed. Way too many people wanted to buy it. The retail investors didn't get everything that they wanted. Then you go on
No,
the stock market, then you have all of these people who just buy it at crazy price and for some reason, like it feels to me it's very simple to, if you have 10 people who want it, then you just sell two. You know, if you have 20 people who want it, then you just sell four. You know, then you just adjust like this how many you put on the market to be oversubscribed by design and not by
uh-huh,
demand, right? And then you get to crazy valuation based on 4% of the company because you created an artificial, like, oversubscribed scenario.
correct.
It's because if they put 30% of the company, 50% of the company, or 90% like a normal IPO,
Yep,
then they would probably not be oversubscribed. And then what? Then
they could be
what happens?
undersubscribed.
They could be undersubscribed, and then they could not sell the shares, and then everything would be
Well, then it's a
completely different.
nightmare. But
Exactly.
I'm losing your audio every now and then.
Oh, is it fine now?
It's fine now.
Okay, perfect.
You were pressing some buttons, weren't you?
Exactly, always. But yeah, no, I think it's absolutely crazy. This thing is absolutely, it's so, I mean, in a way, that's very interesting to see that, right?
Yeah, I mean, for me, it's not that interesting because I saw this all the time.
Really? You saw like a lot
But
of IPOs like this starting at 4% and
no,
then,
no, 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 no. But
okay,
but the shenaniganry around what happens in an IPO is just like standard issue
okay,
stuff. Yeah, none of this is shocking to me at all.
okay. Okay. So then there was another thing that was very shocking to me, Michael,
Go ahead,
on this announcement that I found was like, what is that?
talk to me.
So in the Reuters, who reported the news in the Reuters
Hmm.
article,
Hmm.
they say if you scroll down at some point, they say something. Where is it? I wanted the exact number. Where is it? Wait, I need to find it somewhere here. Give me one sec. Yeah, okay, here. Look. They say capitalizing on that interest is crucial for SpaceX, and it had pitched its IPO investors an addressable market worth 28.5 trillion. Okay? And what they call total addressable market here is not the total value of all the companies, okay, like in this space,
Hmm.
is the theoretical maximum revenue it could capture. So it's actually the total revenue that they believe this market is going to be 28 trillion. Okay.
Based on what though?
So total, so, and that's just one line here in the Reuters article. Okay. Like we just say, okay, we believe it's going to be a $28.5 trillion market.
Right.
And then I stopped here and I was
But a
like,
market for what though?
so for SpaceX, okay, they believe the size of their market, that the total revenue that all the company combined in the SpaceX industry can make $28.5 trillion.
So not SpaceX on its own, but
No, no, no.
everybody that's in the industry that's
Yeah, yeah,
related to SpaceX,
yeah.
which is artificial intelligence.
And they say which a bit share is expected to come from AI for businesses. Okay.
Right. So go ahead.
So then I was like, okay, wait. First of all, let's stop here. Let's put $28.5 trillion into context. Okay. Like I was like, okay. First of all, what are the largest market size in annual revenue? Because we remember they are not talking about the total value of all the companies, right? Like, so, for example, Amazon, they made $600 billion a year, but they are valued around $4 trillion. So here we are
Yep.
really talking about the revenue, not the valuation of the company.
Yep.
So the largest market size as of today is life and health insurance at 6.17 trillion. That's the number one. Number two, commercial real estate at 5.5 trillion.
Trillion.
Then
Is
oil
it
and
globally or
gas,
is that just in the United
that's
States?
that's globally. Largest global markets by annual revenue.
Got it.
Then oil and gas, 4.2, and automobile and manufacturing, 2.5. So which
Hmm.
means everything combined, we are still like twice smaller than the $29 trillion that they announced.
Right.
Okay? So then I was like, okay, once again, let's just put that into perspective. The cloud computing markets, so just like Amazon plus Google Cloud plus Azure
You're talking about
plus Alibaba
AWS
Cloud,
plus Azure plus Google Cloud
like
plus Alibaba Cloud plus whatever.
like as of now, what's the market size of this? Because we know it's all public companies, right? Right now we are around $1 trillion,
I was going to say $1 trillion.
the total cloud computing business. Okay,
Right.
then the smartphone market. Do you have an idea? So iPhone plus Samsung plus Huawei, like everybody combined,
It's got to be also around $1 trillion.
500 billion in
Yeah.
2026.
Fair enough.
Okay, so everything that we use daily, the iPhone, actually also like the laptop market, so the MacBook Pros and Lenovo, Dell, HP, and all of these guys, we're around 250 billion.
Yeah.
Okay, so how do you get to 29 trillion? Like we are so far away, right?
So but they're projecting way more rocket launches, way more AI in space, way more AI corporate usage, like all enterprise usage, all this stuff.
But like, I agree you need to dream big, right? But today, cloud computing is $1 trillion market. To get to 29, that's like, okay, or either they dream big or they have a really long-term view. Yes, maybe in 2500, we're gonna get to 29 trillion, right? If you do like a 5 or 10% growth a year that you compound over 500 years, yeah, maybe you get to 29 trillion. But this money needs to come from somewhere. And that's that's really what I don't like, in this media stuff is that.
Can I make another more near-term point?
Tell
So
me.
first of all, I love the way the mainstream media just writes this crap
Exactly.
down
Exactly.
with no backup, no verification, no math around it. Not like, here's how they get to it. It's just like, Martin, undercover media next year is going to make $1 trillion.
Yeah. Oh, $1 trillion.
Or close, I think.
Yeah.
Do you know what I mean? They just take it at face value. They're just stenographers. You know what is stenographers?
No, what was that?
Okay, you should know this word. It's actually really good.
Yeah.
A stenographer is the guy or gal who sits in court and listens to the testimony and just writes it down word for word, verbatim, what they say.
Exactly.
No analysis, no nothing, no thinking. If you say like, that dog ate that python, he's just going to write down that dog ate that python. Whether that's true or not is inconsequential.
Yeah.
And that's what Reuters is doing here.
Exactly.
SpaceX says that their total addressable market is 29 point something trillion dollars. Okay, but based on what?
And what does that compare to what we use every day as of now, right? Like, it's just absolutely insane, first of all. And so, and I think this is fueling the fire of the retail investors who believe it's just going to be huge, right? Like they're like, oh, SpaceX is just valued at 2 trillion, but they're going to make 30 trillion, so it's going to grow. I need to buy the stock.
What do
I'm
you
gonna
think
make so
the
much money?
person thinks that Elon Musk's IQ is?
I think in the general public, people think he's super smart.
But everybody thinks his IQ is like 190.
Okay.
But is it really?
I mean, he's doing
Or is he just a dick?
He's doing big things, right? Like today, we need to give it to him. Like he's doing big things, and
Sure.
are building that.
But is SpaceX really going to have $30 trillion of a total addressable? And that's just a total addressable market. The presumption is that they're going to take all of it. I'm not buying it. I haven't been buying this from the beginning anyway, right?
There's nothing anywhere close, right? Like once again, like cloud computing is a $1 trillion market at the moment. It's not going to be 30. I mean, maybe it's going to be 30 times bigger, but not.
But also think about it. What did you say the biggest market was?
Insurance,
which is what, $6 trillion.
$6 trillion. So they believe it's going to be 5 times larger than insurance.
But they expect the insurance market to pay them to use artificial intelligence to make the insurance industry bigger than 6. Do you know what I mean? So like, are they expecting, because you said that all that stuff combined was only 15 or approximately 15 to slightly less than $15 trillion.
Yes. 6 plus 5 plus 4.
So you're telling, not you, but so they told Reuters, or somebody told Reuters, that the total addressable market was $30 trillion, which means that either all of those industries are going to double in size and spend all of their revenue.
Exactly. That's a good way to put it here.
On AI.
You're right. Yeah, that's a really good way to put it. It means like 100% of expenses of insurance, plus commercial real estate, plus oil and gas, plus
automobiles,
All
and
of
other
them.
manufacturing, or it's all going to get spent.
All the money tomorrow goes to AI only.
Only.
Right?
Like,
So
they're not
there
going to
is
build any more manufacturing plants.
nothing.
They're not going to hire any more salespeople. They're not going to do any of that shenaniganry. They're just going to spend all their money on AI.
And we also need to double in size, Michael. Don't forget about that. We also need to double in
I was the
size.
one who said it. I'm not going to forget
Exactly.
it at all.
So every company in the world need to double in size first of all, and then spend 100% of their revenue in AI to get to the $28 trillion like number. So I would say,
Can I make another point too, Martin?
Mhm.
Let's just, how many supermodels do you think there are in the world right now? No, but really,
I have no idea. Tell me.
you know what a supermodel is, though, right? It's like
course.
the model that they're like on the cover of like Glam, you know,
Mhm.
Elle magazine. They're the ones who do all the Gucci stuff. You know what I mean?
Yes.
Let's just say there are 20 of them.
Okay.
So the total addressable market for me for dating a supermodel is 20.
Yes.
What do you think my chances are?
I think 20 out of 20, Michael.
No, I think it's fucking, sorry, I think it's 0. So the mere fact that they exist doesn't mean that it's possible.
And I would say, like, yeah, so first of all, yes. But then I would say Elon Musk is known for throwing out massive numbers that are just,
He wants to put 1 million satellites in space.
Exactly.
That's
Like he
never
says-
going to happen.
he said we're gonna do this big thing, and then he's always doing that, right? He's always like talking about how big things can be and not really what he thinks is going to happen, right? So
Right.
or maybe like it's just like an imaginary number that he hoped for, but realistically it's never gonna go there. And I would say
I don't think so. I think he's wish casting in a way that
All the
like
time.
is actually really irresponsible. And I think the fact that the stenographers in the mainstream media just
exactly.
parrot and repeat what he says. But can I make an even deeper, sort of more salient point here?
Tell me.
They've had 0 success in getting people to use XAI up until now.
Yeah, 0.
So and part of it is the association with Elon Musk, who's turned into like a live wire, like a third rail. Do you know what a third rail is?
Tell me.
So a third rail is for like a subway or a metro that runs on underground electricity. There are 2 rails, and those are the rails that the wheels run on.
Okay.
And the third rail is where the electricity is. So if you step on the 2 rails where the wheels run for the trains, like nothing happens to you because there's nothing going on there.
Okay.
But if you step on the third rail, you could get electrocuted because that's where all the electricity is. So this is like a third rail because if you step on it, you're going to get killed.
Yeah. And this is exactly the type of article that the retail investors are going to read. Right?
Sure. Because this is where like your mom would say to you, oh, it's a $30 trillion market. This is the biggest thing that's ever been invented. I have to be in this stock.
Exactly.
And they don't have time to go through and do the analysis that you did.
Yeah.
Right?
Just like we talk about tech all the time and we talk to everybody. So that's why we have so much more information, I think. So that's why like I really wanted to put these numbers into context because I mean I think it's okay to be delusional in terms of massive numbers when you're a private company, but this is the danger when you do publish. This is really dangerous.
Well,
right?
but it's also illegal. But here's the reason why it's a third rail. So Elon Musk has turned into a third rail. Why is that? One, because he's kind of lost his mind a little bit, at least in the public view. Again, I'm not making a value judgment. I'm just saying if you look at the guy who who took over Tesla, who started SpaceX 6 years ago or 7 years ago, he was the guy who just spoke about business and had business aspirations. Come out of PayPal, like did all this kind of stuff, and everybody thought he was kind of like a boy genius.
Yeah.
I want to check something just really quickly. Just give me a second. Elon Musk is 54 years old.
Oh, wow.
And he's not healthy either. Let's say he lives until he's 80.
Okay.
That's 26 years from now. Are we 25 years from now, actually, because his birthday, I forget exactly when it is. Yeah, it's in June. So he'll turn 55 this year. Are we presuming that they're going to take that total addressable market in the 25 years that this guy's alive? And that he's going to, into his 70s and 80s, that he's going to actually have the energy. He's not healthy, right? To be able to run these companies in a way that he's running today. The point is that also he's become toxic, right? He used to be this kind of aspirational dude, and now he's turned into a little bit of a weirdo, and that's not good for companies. But that's also, Martin, why I think XAI is not getting a lot of traction. But the second thing is, when Cursor was independent, it didn't have any of the third railness of being associated with either SpaceX or Elon Musk. So what's the implication on that business now? If you have a choice between using Cursor, using Codex, or using Opus 4.8, and you're just thinking like, who's more stable
Yeah.
from running a business? But also like, who would you rather give your money to? Like, I don't know about you, but I know what I do. When I walk outside every day to buy a cup of coffee, I'm thinking, do I want to give it to the guy who owns the shop, or do I want to give it to some guy who's franchised the thing and has to pay money back to corporate back in Seattle?
No, for sure.
And I think at some level, a lot of people make those decisions. So the question is, do you want to give that money to Cursor now because their new ownership is just weird? And again, when they were here's the thing: is like when you were an upstart and an underdog, people are like, yeah, let's support these Cursor guys. But now, like, they just got paid $60 billion. But to be fair, we're going to have to watch what the stock does, because it's now down. It's still down over 5%, almost 6% today.
Everybody sells because they want the Cursor guy to have a good price. So they're like, okay, let's just get the price down, price down, price down. While you were talking about it, I was doing some math. And if you start at $1 trillion right now, like total addressable markets of cloud computing as of today, $1 trillion, and you want to get to 28 trillion in 25 years.
For cloud, you mean?
You know, for like the 28 trillion addressable market that they told.
You just did some math, and you did compound annual growth, yeah?
Yes, you need an annual growth rate of 14.3% over 25 years.
Compounded, though. So every year 14. So then it's 14 on top of 14, 14 on top of 14.
Exactly. So if every year for 25 years you grow 14.3%, starting at 1 trillion,
right,
you will get to 28 trillion in 25 years when Elon Musk is 80 years old.
Right. So can you also do a little bit of math on like what has Apple's growth been since the launch of the iPhone, since 2007? What has their compound annual growth been?
What is Apple compound annual
revenue growth rates since the launch of the iPhone in 2007?
Of the iPhone in 2007. Okay, I'm asking Gemini to do all this math. By the way,
it's fine.
Gemini in Google Chrome is absolutely amazing now. It's so cool.
Gemini what?
In Google Chrome in Google.
Oh, I know. I use it sometimes. It's pretty cool.
It's absolutely insane. Huh? Oh wow, 17% apparently.
Okay. The iPhone has been the single most amazing product ever invented by any business ever, with the fastest growth ever. So you're presuming that it's going to be just slightly worse than that.
Yeah. That's pretty much the what I do think. But so well, actually, it's getting like all the revenue. It looks like iPhone. No. It used fiscal year. Yeah, okay. It used all revenue, so that includes like every. Actually, only consider iPhone revenue, if possible. Not all Apple revenue. If it can. But yeah, no, it's absolutely huge.
But so the other question though is the enterprise growth rate for Cursor going to continue at the same pace that it's been up until now, even after it's owned by a company? Because SpaceX makes most of its money, right, from its data center stuff.
They will. I think as of now, they make most of the money from Starlink, but they will.
Excuse me, from Starlink. Yeah. But then they're going to make money from the data center. But they're going to run into this, because if you have a data center today, it's going to monetize over time for sure.
Yeah,
But how hard is it going to be for them to build Colossus 3 and Colossus 4 in the same market that everybody else is trying to build, whatever the nickname is for their data centers too?
Yeah, no, for sure.
In a constrained environment, right?
It's going to be much harder in 2027 to build Colossus 3 than it was in 2017. All right, like much harder, and it will get harder and harder every year. So yeah, no, I think like this $28 trillion market, I was like, okay. It's absolutely insane. This money needs to come from somewhere, right? So it's spending from people. There's no way we get to that type of revenue anytime soon, right? So
And also, can I tell you something else that's going to happen at Cursor?
tell me.
There's going to be a cohort of people there, and I don't think Cursor's that large a company. They're going to make a ton of money, right?
Yeah.
And after the lockup, they're going to be, I don't know, some percentage of those people are just going to be like, I have $45 million. What am I doing? How come I'm not in Bali? Do you know what I mean?
Yeah.
So retention's going to get harder, particularly if the stock. Here's the other big problem, Martin. What happens if the stock goes back down to the IPO price or below? When your average price is way above that.
Yeah. No, for sure. But also, like, there's a possibility that it just cut in half, huh? And SpaceX is worth 1 trillion in 1 year. And then in this case, the investors who got in at the last round would basically get like the same valuation that they got in.
Can I make another point though that no one else is talking about?
Tell me.
So now my total compensation, if I'm a Cursor employee or a senior manager or a senior person at Cursor, is tied to the stock of SpaceX.
Yeah.
But I don't know where it's going to be.
No.
But imagine that there's a group of people out there that are afraid that the price is going to be below the IPO price.
Mm-hmm.
So that also means maybe that there's a cohort of people that are going to start buying put options.
Okay.
You know what a put option is, yeah?
Tell me.
It's
again.
a put is it's an option to sell at a specific price.
Okay.
So right now, let's just say I'm not looking at the stock price, but let's say the stock is trading at 190.
Okay.
But I want to protect my downside, so I buy a put, which means I can sell to somebody, the guy who writes the option for me, if it's OTC, over the counter, it's not like a listed option.
Okay.
Let's say I want to sell at the bottom 150.
Okay.
That means there's going to be a lot of price pressure around the 150 level, which means that the more people that buy put options with a 150 strike price, the more likely it is that the price is actually going to go down to 150. And for people that bought in the IPO or prior to that, they wanted to take advantage of the spike, but they can't because there's a lockup. They could be trading in the derivative markets that nobody knows about because that could all be OTC.
Yep.
So there's all this stuff going on in the background that no one's aware of.
There's a lot of stuff happening in the background for this IPO.
It's going to be not just this IPO, but in all IPOs. But in this one, it's really interesting, right? Because you could have a whole host of employees at Cursor that are buying put options, let's say with a 175 strike price.
Yeah.
Just in case, because I don't know what the volatility is there, so I don't know what the price of those put options are. But let's say you have $75 million worth of stock, and you want to have protection down at the price of 150. You may spend $500,000 to do that. If it's gonna make you a certain amount of money, right?
Makes sense. Yep.
And because here's the bet you're making: if the stock never goes down to 150, that means it's higher, which means you've probably made the money back.
Yeah.
That you spent on those options.
Yep.
But if it goes down there, you have protection.
Yes. Makes sense. Makes a lot of sense. So yeah, no, really interesting. And I think like if Anthropic IPOs, we are going to see the same crazy things. I think it's going to be even worse with Anthropic. Just SpaceX is not.
Well, yeah, because look, one of the things that we talked about that I heard the market talking about 2 days later after we mentioned it was all this stuff that's going on with Anthropic has to do with their IPO.
Yeah, I really
all
think
of it. And the government it seems to be meddling so that their IPO goes worse because they won't allow them, to use their models for, autonomous drones.
Yeah. But by the way, I wanted to mention something today as well. Maybe I can show you on the
Go ahead.
on the live. Let me just check first very quickly if it's going to work.
Okay. Do we have any of our guests coming in, Martin?
Not yet.
Okay. I'm good.
Not yet.
I got plenty more to talk about, so I'm not worried about it.
Yep. So yeah, but what I wanted to show you was that. So
is that Anthropic? It is, right?
Yeah. So that's the Cloud.ai.
I see
and you have the same on the Cloud platform, which like when you go to Cloud, that's the same. So we remember like Fable was launched on Thursday last week, and on Saturday it was banned. Okay, 2 days.
Yep.
So Fable that we never heard before. We heard about Mythos, right, for a little bit, and then nothing about Fable. That basically it was like a 3 days thing, right? There was a lead the day before it was launched and then banned 2 days after. Now, as of today, we are Wednesday, so Saturday, Sunday, Monday, Tuesday, Wednesday, so 5 days, right? So like twice the lifetime almost of
Twice,
Fable.
more than twice the lifetime of the product itself.
We still have this banner look every time you do Claude.ai. So every people will go.
What does it say? I can't see it.
It says Claude Fable 5 is currently unavailable. Learn more. And when you click on it, it goes to the article that explains that they had to remove it because it was too dangerous to be released, and the US government actually banned it. It's been 5 days. It's still here. It's insane. Like, tell me that's not a marketing play after that.
I was
Like,
gonna say that. I mean, we've talked about this a lot, right?
and it's everywhere. Like, every time you use Claude, every time you use Claude Code, you have this banner that just tells you Claude Fable 5 is currently unavailable. It's been
Unavailable.
5 days, twice the lifespan. I mean, I'm sure there's people who just go on Monday and they just completely missed last week because they were on holiday and they
Yeah.
just didn't see it coming. And now every day they just see this thing that tells them, hey,
Yeah.
the model is too dangerous to be
It's too dangerous.
released. I don't know. Like when I see that, I'm like, now tell me this is not like a big marketing player, right? And the only thing they want is actually to just show how dangerous their model is to be released to the public.
Yeah. I mean, can we just get back to this idea that even if the total addressable market is $30 trillion,
Yeah.
that the chances of SpaceX taking that AI $30 trillion is so low
Yeah.
that I don't understand why that's being priced into what the price of that stock is.
Yeah. No, for sure.
I don't know.
For sure. Okay, Michael, I think Satyen, our guest, has just joined us. Okay.
Superb.
So thank you very much for today's news, and I'll see everyone tomorrow, and I will leave you with our guest of today.
Okay, and I have a little bit more, Martin,
Perfect.
while you're bringing the guest in.
Perfect. Bye bye, everyone, and I will see you tomorrow, 11 a.m. as always, for the biggest news of the day.
Couldn't do it without you, Martin. Thank you.
See you.
Okay, just so while Martin's doing that, I just wanted to run through some other stuff too. So why would Cursor want to do this? Why would any sphere want to be purchased? Well, what is one of the biggest roadblocks or one of the biggest problems that these AI companies have? They have compute problems, right? And right now, Colossus 1, Colossus 2, SpaceX, Elon Musk, XAI, they have excess capacity. And AI coding tools need large amounts of compute because developers that are using those AI coding tools expect really fast, context-aware answers across really large code bases, right? And that's a problem for them. So why would they want to do this? They would want to do it because they want to be in a place where they can get access to compute in a way where they don't have to worry about it. And that's actually really important to them. So that was one of the other things that I wanted to talk about here. Satyen, can you hear me okay? That is awesome. I can see you and I can hear you. Are you standing?
I am. Is that okay?
No, it's perfectly fine. I love the idea of standing desks and standing work. So I like it a lot. I like when people come in.
I just want to make sure my Zoom is appropriate. So let me just see if that's going to work here.
You can take it out a little bit if you want.
Out?
Out or in, yeah. I mean, I can see basically from your shoulders above.
Okay, so let me just pull this weird dartboard out here, which probably.
Oh, no, that's fine. At least we know your background's not virtual now.
For sure. Is that better?
It's fine. Either way, it was fun. And you couldn't see the dartboard anyway.
Oh, perfect. Okay.
Okay, let's do this thing. So it's great to have you here. I really appreciate you taking the time to do this. We wanted to bring you on because we wanted to talk about how agentic data intelligence is going to help enterprises turn like trusted data into usable AI and kind of better business decisions. But before we kind of dig into some of the questions we have, maybe you could tell our audience a little bit about the important work that Alation does. Did I pronounce that right? Alation?
That's right. It's called Alation. Alation basically delivers what we describe as an intelligence operating system to mostly Fortune 500 and Global 2000 companies worldwide.
Mm-hmm.
What that effectively means is that people obviously want intelligence. They don't want it to be artificial. They want it to be real, and they want it to be sort of based in truth and reality and fact. And to get that reality and to get that truth is a really hard problem, because AI will always give you an answer, and often it'll sound super confident and it won't always be correct. And what you need to do to ground AI in truth is to train it on your data, your information. And that means that you have to be able to feed it the models you trust, the data that you can trust and trust it to access, and to ensure that data is governed and appropriately managed, the semantics of your organization, the institutional knowledge of your organization. And if you can do those things, you can get some pretty magical answers. But it is also the case that you have to do the work to get there. And we help customers do that work. We help them do that efficiently. And we get some pretty incredible results by helping customers automate their supply chains, certainly comply with regulations. And that's particularly true in financial services and healthcare. And also critically, just completely optimize their engineering pipeline so that they can deliver a product to their customers much faster.
So one of the things I was thinking about before we started recording, when I was prepping for this today, was like, I know from when I was working in big enterprises that a lot of the data that we had was deeply siloed, right? So I'm wondering about the preparedness for some of these big companies to be able to just have their data in a way that's organized. I want to talk about this without talking about AI, if you don't mind, right? Because I want to get to what that step change means actually as well. But how ready do you think these companies are fundamentally for being able to organize all their data? Because I could imagine a situation where my boss came to me and said, okay, we want to do this thing with one of our customers, customer B, whatever it is. Can you go grab all the data that's associated with that customer and get back to me? That could have taken days or weeks in the old days, at least when I was doing this, which was a while ago, but still. I think
if you wanted to do it manually and once for a particular project, it could take you days or weeks. If you wanted to do it at scale for your entire organization, often it might take you months, quarters, or years.
Exactly.
And
we had a small technical problem with Satyen, but we will get him back. It looks like they're bringing him back anyway. So just give us one more, or give us a moment. There you are, Satyen.
Did I lose you?
We lost each other.
Okay, excellent. Sorry about that.
No, go ahead.
It could take you days. It could take you months and years. And so the reality of sort of assembling data is that you can spend entire lifetimes on getting data foundations right. And I think one of the changes that AI helps you introduce is that it allows you to say, look, I'm going to solve a very specific business problem. And what I'm going to go do is grab the data and clean the data and govern the data that's specific to that business problem. And so by narrowing scope and not trying to get all of your data right, but instead of getting some of your data right, and specifically the data that you want to use to solve a particular problem, you can do a lot. But it requires you to take a different approach than a capabilities-based approach. It requires you to take a very clear outcomes-based approach to solving very specific business problems. And this has always been true of data, but if you don't know where you're going, it's going to be really hard to get to where you want to get to.
Yeah, I mean, look, this was one of the fundamental things that I used to say to junior guys that working for me is, if you don't know, and I have this very specific example that I won't go into, but I remember this one guy was working on something. I'm like, what's the end here? He's like, I don't know yet. I'm like, okay, well, you should stop working on it, because if you don't know where you're trying to go, then you're going nowhere, or you're going backwards, actually. Can we talk about this too? I feel like in the last, we're in June now. Let's just say the last 6 to 7 months, and I don't mean that in an ironic 6-7 way. Let's say in the last 6 to 7 months, the way people have been interacting with artificial intelligence, and particularly agentic AI, has changed dramatically, right? Because the tools have changed. How has that changed the way that you and your customers are interacting with their data?
I think there's a couple of different ways in which it's changed. I think the first is that the expectation around what AI can do to help the work of data management has rightfully increased. And so people used to spend lots of time, and still spend lots of time, manually documenting and describing and tagging their data, and they don't have to do that anymore. And so there's just an increased awareness based upon what you can do in ChatGPT and Claude, that you should be able to do more with the tools that are available to you. So that's great. And I think that's in general good because it gives people a feeling that they have the ability to make impact in a domain where companies get often quite lost. I think the other thing that's happened is that it's also increased the expectations on these programs.
Yeah.
Because now every board is constantly saying, where are we with AI? AI is an end to itself. People want to be able to do more with AI. And so there's a lot of intensity and light. Now, the problem is that while that's happening, there's also a lot of risk aversion around what AI can do with businesses and what risks it might create. And so there is this gap, which is that the expectations are very high, but the ability to sort of deliver, going back to your original question, is quite low. And that is where we play.
So this is actually another really interesting topic here, because you're right. The boards are putting tons of pressure on the C-suite, and the C-suite's putting tons of pressure on the middle management level, going like, what is our AI strategy? But again, at the end of the day, because of fiduciary responsibilities and other things, boards tend to be kind of conservative as well. So how are you seeing them balance this idea of we need to move as fast as possible in the AI space, regardless of what our strategy is, but we're kind of risk averse too, because those two things actually run in contention a little bit, yeah?
Yeah, I think it really depends on the awareness and the intelligence of the board and, of course, of the management team that is trying to deliver on these initiatives. I think the worst case scenario is the AI washing of projects that already exist and sort of saying, well, hey, we have this many licenses, people are using this stuff.
Right.
I think boards are starting to see through that representation of progress where token usage and tool usage is an adoption are fake metrics, because frankly, this stuff is really expensive. And so the mapping of delivery of cost, without delivery of value is something that I think people are coming very, very alive to. And you see that even in the most tech forward firms, where Meta was, a couple of months ago talking about token maxing and measuring engineers on their token usage, and now is pulling back, right?
Yeah. Yeah, I agree with you. I think this idea of token maxing or token maximization, this idea of that's some kind of metric of are you working hard enough or are you using enough AI, is kind of silly, right? It's almost like, are you getting enough vitamins? It's like, well, how many cookies did you eat? It's like those two things seem really highly unrelated to me. Can I ask you this as well? Are companies now worried, or at least thinking about what the token expense is in the context of how much artificial intelligence and particularly agentic AI, right? Because that's where most of the cost is going to be. Sending a query to a like ChatGPT, or frankly just to Anthropic, is not that expensive. But when you have these agents that are out there iterating and thinking and doing things, and as you said before, right, because they're not deterministic, because they're probabilistic, they come back with answers sometimes that don't mean anything, which means you have to do even more work to get the response that you want. How concerned are companies now, even in your space, that like they're maybe overusing their artificial intelligence and trying to get a balance better of like where they actually should be?
Companies are super concerned. And a lot of what happens with these models, and one of the things that Alation does in some ways counterintuitively, is that we help companies save on their token budgets and token expenses.
Interesting.
Because when you're trying to get a model to do something, you can ultimately try to get there through iteration and sort of really sort of teasing out and constantly training the model with different evals. The other way you can get there is by not having it rediscover knowledge that is already known to your company, which is exactly what Alation helps people and, of course, models do. And so by giving companies and their models a priming point or a start point that captures a lot of known and extant knowledge, you don't have to spend the same amount on token budgets. And so when customers come to us and they say, we're spending all this money, we're wasting all this money, it's interesting, and they don't realize that by capturing their knowledge better and by being clear about what they're governing and what their data means, they can actually optimize on their compute expense and their token expense.
Right, but if they're trying to do that, and again, just tell me where I'm wrong here, understanding what the knowledge is that they have and keeping that knowledge, like you said, extant in a way that they can use it constantly is part of this idea of context, right? So they need to have that be part of the context. But the models that exist today are not great at this sort of idea of long context, of remaining that context. I feel like when I'm using artificial intelligence, that I have to constantly remind it of like the things that I've already told it. And I understand that if you have a very large sort of token budget, you can do more of that. But is there a way, like, I'm just curious what your view is on the idea that the existing models today are going to be the same models that people are using 3 to 5 years out because of these exact problems that you're talking about, that this idea that these LLMs are the end game for the way that artificial intelligence models are going to work? Or are you starting to see companies already, particularly in the context of the cost that they're seeing, and this excuse me, this difference again between probabilistic and deterministic models, that the whole thing could change actually over time, so that these models are way more efficient, and that's part of the cost savings that they're going to get as well, but also that the outcomes are going to be more along their expectations?
No question. Look, I think the models are plenty powerful. And
Very.
this idea of cutting up context and delivering it appropriately and mixing deterministic and stochastic answers so that you're able to get to a cost optimized, ROI optimized outcome, given what you're trying to do, is
Exactly.
inevitable. It's going to happen. It's happening already today. And people are, in many cases, using smaller models, decreasing the context windows, being very clear about what the input set is, iterating. I mean, all of these things are things that will increase your eval success rate. And people are doing that now and today. And I think the best of us, they have that phrase, like, the future's here, it's not evenly distributed.
Right.
The most forward organizations are already doing this work because they are benefiting. But it is the case that there's a lot of work to do to bring this to the mainstream.
Do you think sorry, go
The
ahead.
mainstream organization and the mainstream enterprise, for sure.
Do you think that the most forward organizations are also going to start using open source models as a way to lower their costs, in the sense that for tasks that are really repetitive, that they don't need the best model out there, and because the open source models that are particularly the ones that are coming out of China, like Qwen or Kimi or DeepSeek, the cost of using them is just so much lower?
Yeah, absolutely. I think it's inevitable. I think as particularly as companies are able to see the differences between particular models, but I think that model testing harness, which we provide the ability to sort of build agents on sophisticated models, and then you can test the same outcome and the same set of input-output pairs against the less sophisticated models.
Right.
That work is inevitable as you move from pilot to production. One of the things that I think the best users of this material state is that you sort of start with the most sophisticated models,
Yeah.
and you slowly degrade to whether it's the earlier version or
Right.
this graceful degradation concept is super important, because you don't know what the art of the possible is unless you use the most powerful stuff. But on the flip, you can't use the most powerful stuff for every task, and certainly for the low value task, you don't want to.
No, I mean, it's like using a rocket ship to take your kid to kindergarten. Do you know what I mean?
Yeah, hard.
At some level. Can I ask you one more thing as well? What is the training like? These tools are so new, right? And you're right. Like, to get a mainstream, like a forward-thinking organization, they're going to have people in there that probably already understand this, and maybe there's an FDE inside their organization already, so they're getting better information. But for your just kind of, I don't want to say run of the mill, but just for your regular business that's out there running, that's even enterprise level, the amount of knowledge to use these tools, particularly on the agentic AI side, how would you categorize how it looks to you? Like, are they even ready for this?
So it's funny. I think that counterintuitively, I think that these technologies there is a lot of sophistication. So I think if you're trying to use it at the limit of what these technologies are capable, coding probably is the most sophisticated application. There are deep and interesting and constantly, sort of evolving techniques on optimizing the use of LLMs in order to be able to get to a certain outcome and to get an outcome better, faster, more efficiently.
Sure.
On the flip side, I think there are so many baseline use cases that, if you think of an LLM as basically a natural language computer, everybody speaks English, or at least, most of the people in the enterprises that we're selling to do. And so the consequence of that, or whatever home language they happen to have, and so the consequence of that is that natural language computer really decreases the cost of doing sophisticated things for people that otherwise wouldn't have been able to do this stuff. So I think there's an initial, like, do I understand the tools? Have I used ChatGPT? Have I used Claude? And that number is going up by the day. And then there's this question of, well, okay, I've used them, but do I really know how to use them? And
Yeah.
there's a sophistication and maturity curve, but it is incredible to me how much customers are clear on how this stuff can help them. And it's really not so much about can this be useful or not. It's about the risk of using this stuff and when they're going to be able to trust it at scale.
So one more thing, and then I'll let you go. Do you think there's a bigger risk of not using it than there is of using these new agentic tools?
Unquestionably. I mean, in almost every major technology wave, if you said, look, I'm not going to use the internet, I'm not going to use a computer, I'm not going to use mobile, I'm not going to use the cloud,
Exactly.
you would, in almost every one of those scenarios, have been left behind relative to every single one of your peers in any given industry. And so there is no option but to use this stuff. And I think the most progressive organizations realize that. Now, there are some organizations in some domains like healthcare or financial services where you are not going to put this stuff in front of bank accounts to be able to make in debits and credits. I mean, that's just not going to happen because it's going to make you lose money faster. But you have to use this stuff. No question at all. And we're excited to be able to sort of be at the vanguard of taking companies into the ability to be able to get value from this stuff every single day.
Awesome. Okay. I have so much more stuff for you, but we've got another guest coming in, Satyen. I really appreciate your time today. Thank you so much for taking time out of your busy day to come and do this. I really appreciate it. And I learned a lot. Thank you so much.
Thank you so much for having me.
My complete pleasure. Okay, Martin, let's try to bring Ronaldo Ama in as well. I think this is going to be another really interesting conversation about data. How are you doing this morning? I can. Can you hear me okay? You know, where are you based, if you don't mind me asking?
I am in California, Palo Alto.
Perfect. There's something so, it's so hard for me to explain this feeling before we get into like the main part of this conversation, but it's so hard for me to explain this feeling of seeing somebody like sitting in an American home. I've lived outside the United States for like 30 something years. So I spend very little time in American homes. And when I see the inside of one, I'm like, that's the way people should live. Sorry.
Funny you mentioned that. I am Brazilian. And
but you're not in Brazil right now.
But I built this house with the Brazilian style. And so people that come here say, well, it looks different.
Yeah, but I'm seeing a small part of it. But anyway, it just the space allocation is what matters to me. Anyway, okay, I'm digressing. Look, thank you, Ronaldo, for coming in and doing this. We really appreciate it. We wanted to talk to you about how AI-powered customer intelligence just helps companies be better, how they turn this customer feedback in any kind of sort of service or customer interaction they have into just better ideas, stronger products, and more responsive business. But maybe you can tell us a little bit more before we jump into this about what Birdie AI does so people can have context there.
Yeah, so in a nutshell, we collect data from multiple sources, structured, for example, CRM or your support system. We collect data from, let's say, ratings, NPS, CSAT. We collect conversations that customers have with your company or among themselves. So it could be through your support system, it could be on Reddit. We also collect information from product analytics, the way they use your product. We bring it all together, we structure it, aggregate, and calculate metrics that show you, for example, how you would measure impact on churn or revenue creation. I'm sure you have had the opportunity to call the support system and say, I'd like to change my flight. And you are answered by a bot or maybe by a human. And the conversation may be frustrating. And you express that in the conversation. Maybe you fill a survey and you give it an improper or like a low rating. We pull all that information and help you identify what we call opportunities to improve retention of your customers, to generate more revenue, or essentially to do things in your company that can turn into actions that generate those results. So that's what Birdie does, the context for your customer intelligence.
How hard has that been to do, like before 2026 or maybe before 2025, in the sense that a lot of this data is spread across multiple systems, and in some cases your customer service may even be outsourced to like a call center somewhere halfway around the world or completely around the world. How hard has that been up until, I would say now, but you can define now any way you want it to.
So let
To
me
consolidate all that data and to get sort of good feedback. Sorry, I interrupted you. Go ahead.
No, I'll break your question into two parts. One is, how hard is it? Yes, you do have to pull data from multiple places. And before the rise of LLMs, we were doing our own machine learning techniques, classification, and so on.
Yep.
LLMs made it more comprehensive, but did not diminish the importance of pulling, combining, aggregating, extracting meaning from this data in a very organized way. So that's essentially what we do. On the other part of the question, which is there are companies everywhere, we call them BPOs, for example, servicing customers from different places in the world.
Yep.
It's not uncommon that as a company, you might have bots or multiple service agents supporting your customers. One of our offerings is called Agent QA, which is essentially measuring the interaction from each of these entities and classifying them in such a way that can orient for bots number A, this is the kind of training you do. For BPO number B, this is the kind of instruction that your agents are performing well or not performing well.
Right.
And creating dissatisfaction to your customers. So it's not so much about reaching out to the outside sides of the world, but rather looking at the conversations that are happening between the entities.
So how important is it for each one of these little sectors of data to understand how that data is going to get used downstream or upstream? I don't know what the right term is. Do you know what I mean? In the sense that if you want to understand like that this interaction happened over here, this was a voice interaction that was recorded, this was a product review, but that all the people that are kind of involved in interacting with those pieces of data or creating that data know that it's going to be used then to do this retention stuff and all the other sort of big benefits that you were talking about, that if they're trained to know that the data that you're going to get back in return is going to be better. Does that make sense?
It makes sense, but because there are multiple entities, there's two sides of the story.
Yep.
When we train, let's say, the support agents from a company to do well, you still will have the customer performing actions on your product.
Yeah.
And maybe your product is a challenge, or maybe they're trying to, upgrade their offering. So they're talking to a sales representative.
Yep.
And that interaction may be complicated, or maybe pricing is an issue that is not so much about training, but it's about how you price your product and how do you actually communicate that to your customers. The transparency of what's happening in the communication is important too. So not just about knowing that the interaction is going to generate a result or not. May not be enough because it may be following procedures well defined, but may not be suitable for a great customer experience.
Okay. So my other big question here, and there are a bunch of them actually, are how has this changed? Not just since LLMs have been launched on the planet back in 2023? I can't remember anymore. I think it was end of 2023. Do I have that right? It doesn't even matter. But now that we're in this sort of agentic age, how has that changed the way people can interact with the data that they have, serve their customers, but also get enough insights from their customer experiences that they can actually have actionable things that come out of doing that analysis? How has that changed in like the last 6 to 7 months?
So I'd say that even before that agentic era, let's say, there's been a lot of customer conversations. And by and large, the analysis and understanding of those conversations has been somewhat limited. People would manually look at a small percentage of the conversations to identify, do I have a problem? Do I need to retrain my support agents?
Yep.
So two things happened. Technology like Birdie helped analyze 100% of these interactions. And with the rise of LLMs and agents, those interactions became even more voluminous.
Yeah.
So it's a natural thing today that you have a lot more bots answering questions, supporting sales interactions, supporting collection interactions. So there's a lot more of that. There's also the other side of the coin, which is customers themselves are beginning to make use of agents to do work on their behalf. And therefore, the volume of interactions is increasing 10, 100, 1,000 times over, right? So having the ability to look across all the corpus, 100% of it, in an automated way, which is essentially Birdie's proposition, is paramount to identifying the opportunities for improvement.
And so how does it change the turnaround time for that improvement as well? In the sense that I always like to say in the old days, but the old days could be like 3 or 4 months ago, it could be 3 or 4 years ago. It doesn't matter. But internally, the idea was we'll get all this feedback, we'll do some analysis. Maybe it'll take us 3 to 4 months to do this. We need to then get approval for this thing, that thing, and the other thing. But now that all this information can be synthesized and analyzed faster and found, frankly, faster, how has it changed the turnaround times to turn those customer experiences and the insights that come from them into these actionable things that can actually get done?
So the interesting reality is that the technology allows us to be a lot quicker. It could
Right.
be minutes, it could be hours, it could be just a couple of days, but it still involves processes and people.
Yeah.
Right? So sometimes, for example, you say people are unhappy with your pricing. Okay, you can't just change it in 10 seconds, right? You have to
Right.
go through some thinking, some processes. So the ability to take action has dramatically sped up, but the actual action implementation itself is still has to include the human. It has to go through, some amount of process so that you cannot, so that you can control the outcome.
So when does the expectations of your customers, not yours, but the customers that are using that are interacting with this technology balance out with, as you said, the existing workflows that happen inside these companies that still may limit their ability to react as fast as they might want to act, right? Because at some level, the expectations, both from above, where your board and your CEO and your C-suites are going, we need to do this faster, faster, faster. But the reality is that humans can't decide that fast, even if they have better analysis. But on the flip side, your customers externally are thinking, my expectations are now heightened because I know you can have access then to all this data and analysis faster. How do those things balance out?
So we're seeing a change in organizational design, right? The
Yeah, go
flattening
ahead.
of organization, the reduction of layers. Organizations are living entities meant to support the business. And because the business fundamentals are revolving so rapidly, organizations are also changing, right? So it's very common these days that we see the silos across functions being shattered. So let's say a group of customer experience experts inside a company is now having their responsibilities shared with people in the product group.
Yeah,
People in the
which
training
was
group.
not happening before. Sorry, go ahead.
Correct.
Yeah.
So this is beginning, this is transformation, this is a people side of the transformation. And this is work in progress, as you know, but we see this happening faster and improving the ability to execute faster. So that's kind of how we see the evolution, the technology influencing the organizational design, so people can actually get to actions faster.
So this sounds to me like a big change management. I wouldn't say problem, but like conundrum, maybe is the better way to explain this. But can we dig a little bit deeper here? Because they're not just dealing, big companies, big enterprises, and even mid-sized enterprises aren't just dealing with like, how do we organize all of our data in a way that makes us able to serve our customers and understand the way our customers perceive us in a better way. Like that change management has to take place too. But all of the things that you're doing in this space are also impacting the way sales happens, the way marketing happens, the way all these other things happen. Again, I always want to ask, like, how prepared are these companies for having all of this change kind of dropped on them, boom, all at once? Because everything that we're talking about here has to happen in a bunch of other groups too. Like, how overwhelming is this, do you think, or the sense you get from the people with whom you're dealing?
It is mind-boggling,
Yeah.
but it's not unique to Birdie or customer
No,
experience.
not at all.
Me-
That's my point. Yeah. But again,
Yeah,
you're dealing with them, but in the background, they're also dealing with 6 other service providers or partners that are doing the same thing. And it's like, do you know what I mean? How do you, and stuff's moving so fast that how do
so
you get the right feedback from them as well?
what we find is that we are in a unique position having
Mm.
that part of the customer context. So
Yep.
there is applicability across all functions, people in finance, in marketing, and sales, and support. They're all in product, all interested in that information, having that context, having that
Mm.
feedback from customers. So we are in a unique position to come in and help people gradually, let's say, digest the transformation. So we're working with customers, for example, where literally we're helping them connect different functions and figure out how do they leverage the context that we have in our platform to make their jobs better. And they're thankful to us, which is kind of interesting because it's above and beyond, but the entry point is the context we have for their customers. So they are naturally coming to us for that and naturally adjusting over time.
So you've segued perfectly for me. You saw me like frantically writing a note, and that note was, what types of workflow changes are you seeing? Because this is like an unintentional consequence, I think, of what you guys have built, and that is this connectivity internally of other departments that may not have had that much connectivity prior to that. But what kind of types of workflow changes are you seeing that then end up making the use of this technology way more effective and efficient?
I'd say that essentially the workflows that connect multiple functions are the ones that we see that have the most impact on organizational design.
Right.
So typically people say you go ask a product person to make a change, you ask the pricing committee to make a change, you ask a sales team to make a playbook change, you ask the support team to make a rubric change, and all these changes will compound to an outcome that increases customer satisfaction, increases revenue, or reduces churn. What we're seeing is that as you design workflows across functions and stitch them together through the customer, you're essentially enticing that conversation, enticing people to speak with each other. The most important element of that is having the executive support.
Yeah, for sure.
So, well, we see that with the organizational, let's say, height decreasing and the workflows crossing functions, that support becomes not only critical, but actually inclusive, meaning we see more and more of the C-suite participating in the workflows. I see CFOs asking questions and wanting to know, why am I losing revenue? What's causing that? Give me the reasons. Give me actually verbatim feedback from customers that are complaining. They say, whoa, I actually can influence pricing, and they're crossing over. They're doing something. Hey, there's a product issue here, but can be addressed by a better support organization, better documentation setup. So a lot of cross-functional workflows are the ones that we see provoking the most organizational change management, put it that way.
Do you think this makes these institutions actually just more dynamic in their responses to their customers?
Absolutely, absolutely, yes. I'll tell you that there has been very rare occasions where I went through a support experience, and I got the phone. I said, "Wow, that was awesome."
You mean you personally were like, you went to get customer support, and you're like, that was way better than it used to be, kind of thing.
Exactly. Which 80% of the time is not, right?
No, yeah,
But
exactly. It's not.
I believe their company is doing and succeeding at it.
Do you think that, again, in your experience, when you're watching all this stuff happen in real time, do you see new roles popping up as well? But new sustainable ones. Like I don't want to talk about like head of AI, because I think that kind of thing is going to go away over time as it just becomes part of the product suite that people use. You're not going to need like the global head of artificial intelligence inside of a big company, because it would be like the global head of telephony. Do you know what I mean? Like everybody's using it now that we know how to use it. It's just there. But are you seeing new roles like on the data side, on the customer experience side, maybe even on the sales side, where like because of their ability to use the data in a way that they couldn't use it before, that now they can have new roles being developed inside of their companies as well? Do we see any of that?
So I definitely see new roles being created in this whole area that we're going through.
Yep.
For customer experience in particular, I believe things are still in motion. Everybody agrees customer is at the center of what we do, and we're producing products if we don't have customers to consume them. But they're so horizontally important that there used to be customer experience. There still are customer experience groups that are dedicated to understanding, analyzing, and so on. Everybody is aware of that. There's understanding of that importance. Everybody wants to consume that information. So I believe what's going to happen is a redistribution of jobs to be done and workflows, so that the product person, the finance person, the marketing person will also play a part of the customer experience journey. But somebody still has to be the one kind of leading the charge, holding the flag. So I do believe there's still a role there. It just changes a little bit the shape, the level. I think there's going to be elevated to more of a C level from a customer perspective. You think about customer success, right? the name says it all. It's all about customer success.
Right.
So I do believe there's a change in roles, but this is not, again, unique only to customer experience. It's happening in multiple functions.
Just one more thing, maybe, then I'll let you go, because I think this is also interesting. Do you feel like, and I don't know another word for this, but there's a democratization thing happening inside of these big enterprises where it's not getting forced down, but it's moving down the chain of command where, like you said, there are customer success groups, there are customer experience groups, but now because there's so much more data available in a way that's way more dynamic to sort of the line operators, if that makes sense, people that are doing day-to-day jobs that aren't in the CX group and that aren't in the CS group, to be able to participate more as part of this sort of cross-function thing that you were talking about earlier, where that gets democratized across the entire institution. And in a way, it makes the customer service better because it just means that anyone to whom you can speak as an external client has enough information to give you customer support in a way that couldn't be done before.
Absolutely. Absolutely. It's happening today already. The example I gave to you about the call support and don't have a great experience. Why do they ask your social security 3 times? I mean, if I call, they know my phone number. The great experience I mentioned to you is, hi, is this Ronaldo? Yes, it is. I was like, whoa. I see you have a reservation at 8 o'clock. What would you like to do? I say, whoa, can you change to 8:30? Let me check. Yes, I can change. Would you like to confirm? Yes, thank you. Bye. Whoa. Context. They have context about me.
Yeah.
So that context is being spread to the whole organization. The one thing that we advocate, and Birdie is a part of that, is someone has to be responsible for the context curation. The human in the loop is still very important. But the information should be democratized and available to everyone at every touch point of the organization.
So one more thing, and again, because I think this is also really important as well. The pendulum, when new technologies get introduced, there is a tendency for businesses, and I've seen this happen as well in businesses in which I operated, where they'll see that it can have such a big impact that the pendulum swings, one big way into technology. But then as it moves back in this understanding that there needs to be humans in the loop at every stage, because humans want to interact with humans kind of at scale, that is either happening faster today than it has ever happened before, or that this idea that the pendulum is going to swing back towards more human interactions as opposed to purely only agentic interactions.
Well, first of all, I agree with your comment. There's over, let's say, biasing towards the technology side.
But that's normal. This happens every cycle. Sorry, go ahead. Yeah.
And I do think there is an equilibrium that's going to be reached. I don't say I think it's going to go all the way back to humans.
No, definitely not.
Be in the loop at a different level, right? So I was very pleased with my interaction. It was fully artificial and efficient. But had I had a problem that I wanted to speak to a human, I'd like to do the handoff in a perfectly clean way,
right,
and have the human interaction. So we as humans value the interaction. So I do believe that pendulum is going to adjust gradually. It's beginning to adjust already, very gradually.
Okay.
I believe that.
I believe that too. That's awesome. Okay, Ronaldo, I'm going to let you go. I really appreciate your time today. Thank you so much for spending time with us this morning. And we learned a lot. Thank you so much.
Thank you very much for having me.
It's my complete pleasure.
Thank you.
Okay, I want to thank both of our guests for coming in and doing this. Satyen and Ronaldo, both of them were amazing guests. I learned a lot today. Customer experience, customer data, all that kind of stuff. It was really, really good. That is it again today for AGTP Daily. Thank you for all the people that joined us in real time and for all the people that are going to listen and watch this later. We really appreciate your participation. Give us a thumbs up on today's video. Subscribe to our YouTube channel and follow us on all of our socials on X, on Instagram, and on LinkedIn. And let us know in the comments on all of our platforms if there's anything you'd like us to discuss on our upcoming shows or any questions you have for us in general. As you know, we'll be back again tomorrow at 11 a.m. Eastern Time. My name is Michael Wades. I want to thank Martin, as always, for making none of this happens without him. I'm going to say goodbye for now.